Hey everyone, welcome back to Corporate Decoder, the place where we decode those dense corporate filings to give you the freshest insights, and you might want to buckle up because today we're diving into a company that's making some pretty bold moves by putting a significant portion of its treasury into digital currency, a strategy that's definitely got us intrigued, but also raises a lot of questions. Before we jump in, if you're new here and love getting the real story behind public companies, hit that subscribe button and join our Discord community linked in the description for even more exclusive content. Alright, let's get started with Upexi Inc. This filing is essentially an update to their registration statement, which is a big deal because it signals they're looking to raise more money or perhaps restructure how they're managing their finances, something that often comes with a lot of interesting details. Upexi is telling us they're planning to offer a massive amount of stock, up to 83 million, sometimes even more, through a deal with AGP, Alliance Global Partners. Now remember, this is a resale offering, meaning the shares are being sold by this partner AGP, not directly by Upexi itself. Upexi isn't getting cash from these specific sales directly, though they do have a separate agreement where they can sell stock to AGP, raising funds for themselves up to a really big number, $500 million. It's like a credit line for stock sales, which they can tap whenever they want, which is a pretty interesting strategy. When they're upfront about it, investing in their company comes with a high degree of risk. They're not hiding anything here. And when you see a company that needs to use a filing like this to register potentially huge blocks of stock, it's usually a sign of them trying to secure funding or manage their financial position carefully. And that brings us to their boldest move. Upexi traditionally has been in the consumer products business, developing, manufacturing and distributing things you'd buy. But they've recently made a significant pivot toward the cryptocurrency world, focusing specifically on Solana. They've updated their cash management strategy to hold digital currency directly on their balance sheet. Instead of putting excess cash in banks, they're now holding Solana, or SOL as they call it. They believe this strategy will yield the highest returns on their excess cash, essentially treating Solana like a corporate treasury asset. Their game plan is pretty strategic. They plan to issue more stock and even convertible debt, essentially raising capital specifically to buy and hold even more Solana, and that's not all. They're also staking the majority of their Solana holdings, roughly 95%, to earn a yield, turning their digital currency into a productive asset. It's like earning interest but on cryptocurrency. Now here's where the big rug pull danger lives. According to the filing, Solana and all digital assets are highly volatile. They're not hedging against this volatility because their goal is long-term appreciation, not short-term hedging. This means their treasury value can swing dramatically. Let's look at some of the risks here. The sale of a substantial number of shares could dilute existing shareholders, meaning your ownership percentage goes down if they sell a lot of stock. And this can also depress the stock price. This is a classic risk with these types of stock deals. And for those hoping for dividends, Upexi doesn't plan to pay anytime soon. They expect to reinvest any profits back into the business, which makes sense given their current financial situation. Now, let's look at the numbers. For the 9 months ended March 31, 2025, their revenue was about $11.5 million. That's a big drop from the $21 million they made in the same period in 2024. But here's an interesting part. Their cost of revenue also dropped significantly by nearly $6 million. This meant their gross profit margin actually went up to 64% from 54% a year ago. This suggests they might be streamlining their operations or shifting to higher margin products. However, their general and administrative expenses jumped by about $828,000. This increase seems to be due to legal and auditing costs related to business restructuring, and more specifically reserving for uncollectible accounts receivable from Amazon, a notable detail. Looking at the bottom line for the 9 months ended March 31, 2025, Upexi reported a net loss of about $6.7 million. That's an improvement from the nearly $8 million loss in the same period in 2024. So they are losing less money, which is good, but still losing money. Let's peek at their balance sheet as of March 31, 2025. Their total assets were about $15 million, down from $23.5 million in June 2024. This significant decrease is largely due to selling off assets like their building and the e-core business. On the liability side, their accounts payable were around $1.4 million, which is up quite a bit from about 408 ed use ed id have a negative working capital. And here it is, their digital asset holdings valued at just over $44,000 as of March 31, 2025. This is their initial foray into Solana, and it's a very small amount compared to their overall Treasury strategy, which they plan to significantly grow. Looking at their past two full fiscal years, their revenue in 2024 was about $26 million, down from $36.4 million in 2023. And their net loss for fiscal year 2024 was a staggering $23.6 million compared to $16.9 million in 2023. So while revenue dropped, losses went up significantly. It seems like all the impairments and restructuring costs really hit them hard that fiscal year. Alright, so what's the story here? Upexi is clearly in a transition phase. They're pivoting from a more traditional consumer products business towards a more speculative digital asset strategy. With Solana, they've sold off some significant assets, which has reduced their overall balance sheet, but also brought in some cash and reduced debt. The shift to holding Solana is a high-risk, high-reward play. The traditional business seems to be struggling based on the revenue decline, while the Solana strategy is just starting. The risks associated with digital assets are immense, and the company readily admits this. Their strategy relies heavily on Solana's price appreciating and them successfully raising more capital to fund it. The negative working capital and significant losses are major red flags. Investors need to be very aware of the speculative nature of this company and the volatile digital asset market they're entering. It's a high-stakes gamble, and the success hinges on many moving parts, including market conditions, regulatory changes, and their ability to execute this new Solana strategy effectively. It's a risky path, but one that could potentially lead to massive gains if everything goes right. What's your take on Upexi's bold Solana Treasury strategy? Do you think it's genius or madness? Let us know in the comments below. If you found this deep dive valuable, please smash that like button and subscribe for more corporate breakdowns. If you want to get even more involved, join our Discord community linked in the description. Thanks for watching, and we'll see you in the next Decode.